Good afternoon, everybody. Welcome to the Moving Markets Podcast. It is Tuesday, December the 9th, 2025. The stock market has been closed for almost 20 minutes. I've been in kind of this habit of sort of taking you through the close of the market. I was running a little bit behind today, so the market has been closed for, technically speaking, 18 and a half minutes at the time I'm recording this. Interesting. I always say, don't I always say that? Interesting move today in the stock market. Futures were up early in the morning before the market opened. They all turned negative before the open of the market, but then right at the open, the Dow Jones went positive, and then the S&P went positive, and then later on the NASDAQ became positive. And then about halfway through the day, approximately, give or take, about halfway through the day, the Dow just started to tail off and just had a gradual, steady slide to where I believe it only finished a few points off of its session low. Still not a huge down day, 38/100%, about little over a third of a percent. Not a horrible day. I was away from the computer for a large portion of the day. I was watching this morning until about 9:30, 10 o'clock my time. But the drag on the Dow was JP Morgan down 4.7%, Boeing down almost 3%. Let's see, some other heavyweights, Home Depot down about 1.33%. And in spite of the big behemoth, Goldman Sachs, which, it carries the weight almost with the exception of Caterpillar, Microsoft. I think with the exception of Caterpillar and Microsoft, Goldman Sachs is the heaviest weighted stock by more than double. There might be one that I'm missing in there, but at Microsoft at 491 and Caterpillar at 594 a share, I think are the only two that are not, that Goldman Sachs is not more than double. But Goldman Sachs had a decent day, up almost $9 a share, 1.14%. It's not enough to overcome the combination of JP Morgan, Boeing, Amgen, Sherwin-Williams, Home Depot. Those are all kind of middle to heavyweight. And then Caterpillar was down about 1/3%, and it's the second heaviest weighted stock in the Dow. So that's why the Dow had a rough day. The S&P spent, I believe, much more of the day in positive territory, a little bit of wobbling back and forth at one point, but it had kind of that similar pattern. I can leave that one line there, and it's very similar, just not as deep a drop. And it percentage-wise, it was up higher before it started to fall. But, close to the same time and close to the same pattern, it had that same drop to it. The NASDAQ was one of the three indexes that started the day negative, didn't have that same early jump up. Now look at the opposite pattern in the NASDAQ. It took all day or half the day for it to get going. And then once it got up there, it just kind of stayed somewhat steady, giving up a little bit in the last hour and a half of the day. But again, 13/100%, not a big movement at all. This morning on Discord, I was saying that I thought we would get more today like what we did yesterday. And, kind of uncertainty, a little bit of fear in the market over what Jerome Powell's going to say tomorrow. And we definitely got that. I did not think the NASDAQ would be to the upside. And that's what I did not accurately predict, is I thought all three indexes would, in fact, be down a little bit. Going into tomorrow, this has come down just a tiny bit, suggesting just a little bit less certainty. This was up at 89.4, 89.5. It's given up just a little bit. I think I'm still in this camp. I think there will be a cut tomorrow. I think inflation numbers, even though they were delayed, were tame. I think the job report is troubling. It's the job report that we got. Again, even though it was delayed, it was not a good report when it came out a few weeks ago. I think that's what the Fed needs to make a cut. I think they should be very comfortable in making a cut. But it's anybody's guess. And I know I'm typically the pessimist because I don't like Jerome Powell. I don't trust him at all. It's anybody's guess as to what commentary is made about these next three Fed meetings, the one in January, the one in March, and the one in April. Those will be Jerome Powell's last three. I believe the case against what's her name, Lisa Cook, I think. I believe that case will be done and over, and I believe she will be off the Federal Reserve board. I don't see a way she can maintain that position with what it looks like she has done. Allegedly, I know it's not, proven yet beyond a doubt, but it seems like the evidence is there that she's committed multiple mortgage fraud. So I think it's going to be really difficult for that to not be considered cause as a reason for booting her off the Fed. So Trump's going to get another person that is favorable to him. By all accounts, it looks like Kevin Hassett is going to be the new Fed chair. That could change, but it looks like that's the leanings. Did Trump ever? I thought we were going to get an official announcement, and did I miss that? Um, I'm suddenly, I know a week ago. Let's see. I'm typing, you can see it. Has not officially been named yet. Okay, that's what I was looking for. Has not officially. Sorry, it took me a minute to type that in. He has not officially been. I still think I think he's very much the front runner. You can see if I expand this a little bit, likely nominee. Kevin Hassett is the top candidate with betting markets favoring him heavily. Okay, so he's a Trump guy. I think Kevin Hassett is very qualified for the position. I think he's an incredibly smart guy. I like Kevin Hassett a lot. And he is a loyal Trump guy, a very loyal Trump guy. That's who Trump wants in. I believe Jerome Powell was recommended to Trump in his first term, and it's one of many appointments that Trump made in his first time as president that he regrets. In fact, it's obvious he regrets it. I'm not breaking any news with that. So, Kevin Hassett, I don't think they would have any worry about that. I mentioned on Discord, for those of you that were not on Discord, that the best Christmas present we could get as far as it relates to the stock market is if in his comments tomorrow, Jerome Powell says that he has decided to step down at the end of this year and allow President Trump to appoint someone before May. I don't think he'll do that. I would be shocked if he did that. I think there's too much hubris on his part. I think he is an arrogant, self-serving political ass, to be quite honest. And I think he hates Donald Trump. In fact, in spite of the fact that that's who appointed him, I think he hates Donald. And Trump hasn't given him any reason to like him. Trump's been pretty harsh on Powell, so the feeling is probably very mutual there. But I don't think that'll happen. But I got to tell you, I'm crossing my fingers. I would love it. This market would rally so strong. It would be a December of record. I really believe with only 2.5 weeks left in the month of trading, I think December would be a record-breaking month, not only the biggest December in the history of the market, maybe the biggest single month in the history of the market, if Powell said he was going to step down and Trump could immediately appoint and begin the confirmation process for Kevin Hassett. I think the markets would react so favorably to that it would just be absolutely insane. I don't think it's going to happen. I'm not holding my breath for it by any stretch. But whatever Jerome Powell says tomorrow, let's assume for a moment that we don't get an unpleasant surprise and we do in fact get a 25 basis point rate cut. Whatever Jerome Powell says about relative to those last 3 months or last 3 Fed meetings, it's technically 4.5 months, but relative to those last 3 Fed meetings that he would be the Fed chair for, it will set the tone for the rest of this month. The sell-off that we saw end of November that has reversed itself kind of nicely in the last 2 weeks. And in fact, it's reversed itself very nicely. We're not too far off of this high. I mean, we've only got a little ways to go to get back up to this high that we had, let's call it 6 weeks ago. I don't know if that's exactly what it is, 5 or 6 weeks ago. But this will be a nothing burger compared to what we'll see happen in the last 2.5 weeks of this month if Jerome Powell says Well, number one, if there's not a rate cut tomorrow, that's going to shock this market and absolutely sink it for the end of the year. But if Jerome Powell is Mr. Super pessimistic, if he says, if he says there's no chance of any more rate cuts before he's done at the Fed, right now I believe the markets kind of overall are pricing in two more cuts after tomorrow, uh, from tomorrow until about the middle to end of second quarter of next year. The markets are sort of pricing in the likelihood of two more rate cuts. If Jerome Powell says he thinks that's completely off the table, or if he gets trapped into a question that he shouldn't answer and someone pins him down to be more specific, then we're just going to remain data dependent. I think it's going to be hard for him to not say something stupid, or just, stupid might not even be the right word for it, just something overtly political. And he'll make it sound like it's not political, but it will be. He'll very probably say, we just want to be more careful. We need to be more careful. We've got to be cautious. We can't risk inflation getting out of control again. The tariffs are bad. People are going to start feeling the effects of it. Those kind of comments like that. If he makes comments like that, you could see this market go in the toilet. And I mean a sharp decline, probably beyond the 6,600 mark on the S&P, probably more like a move down to 6,400. If he manages to stay very, very ambiguous, and if he manages to say something to the effect of, we're just going to remain data dependent, tariffs haven't had as much of a negative impact on consumers because consumer spending is still strong. The job market has become enough of a concern that we can't focus strictly on inflation. Those are the kind of comments that I think would cause a rally, and I could see the S&P going up to 7,000 before the end of the year. I mean, that's only 160 points and a lot of days to do it. I mean, you've got a lot of trading days to do it, even with the holiday schedule, plenty of trading days for it to get 160 points. So we'll see. We'll see what happens. I always say it's going to be interesting. I'm going to be kind of on pins and needles. I always am when the Fed makes an announcement, because I always worry about not so much what they're going to do or not do. That's usually pretty telegraphed, but what Jerome Powell is going to say. And I think, unfortunately, he allows politics to cloud those comments. So it'll be fun tomorrow. Now let's talk about some trades we have open. Our Micron trade is profitable, not by a lot. Couple of times today after opening this trade this morning, I saw it go briefly, like for a few seconds at a time, 10, 11, 12% to the upside. No chance of getting out, because as soon as you put in a limit order to try and get out with that percentage, the price immediately changes. But my expectation, barring Jerome Powell absolutely putting a dagger in our hearts and sinking the markets, barring that happening tomorrow, I think Micron is going to continue to climb. It had a very strong day today. I think it's going to continue to climb. And before we get to the earnings report next week, Thursday, I think we will be able to exit this trade for 10, 12, maybe 14%. If I can get out of this trade with 10% profit or more before the earnings report, I will take it without hesitation. And if we're able to do that 2 or 3 days before the earnings report, I'm not afraid, with different strike prices, to get right back into a Micron trade for the earnings. So that's kind of my plan right now with Micron, is to hope that tomorrow, Thursday, and Friday it continues to climb, gets up here to this 260 a share mark, maybe goes a little higher, maybe goes above its all-time high, and gets a little bit higher. And then we can exit the trade, like I said, with that 10, 11, 12% profit. But if we're somewhere back here near the mid price between the long options, halfway between the long put and the long call, That would be an ideal spot to be when they report earnings, because then I think earnings would either knock them way down where we need to, or pop them right back up here where we need them to be. And in either scenario, we'd be in really good shape. What you don't want to have is to be trading right up here by 260, not have much of any profit. And then if they hit a good earnings report, you're fine because they'll continue to go up. If they miss and they disappoint, they might have a big drop, but a big drop might be from 260 down to 240 and not nearly far enough down to guarantee profit in our trade. And that's what we don't want to see happen. So that's the trickiest part of a long iron condor spread is that possibility that right before the catalyst event, you see the position trading too close to the short call or too close to the short put strike price. And that ends up being very detrimental going into a report. So that's what we've got to really watch with Micron. We have a DIA trade for the triple play members that is expiring on Friday. Right now, my DIA trade is down. It's down about 20%, and that's because it was almost profitable yesterday, and it was actually even better than that end of last week after the big surge we had to the upside last week. DIA is trading right now in between the strike price of our long put and the strike price of our long call. So that is a good thing. When we get that event tomorrow, when we get that report tomorrow, I believe, like I've already said, the Dow is either going to tail off well below 470 before the week is over. If Powell screws up, and that's what I would call it if he is a real naysayer tomorrow and super pessimistic, I would call that a screw up. I believe we'll be down below 470, maybe back down here to 460 in just 2.5 trading days. I really think we'll see a 3-day move like this one right here, or more. If Powell does the right thing, says the right thing, strikes the right tone, we only have to go up a little bit. It doesn't have to be this massive rally, just a couple of days of decent movement to the upside. A combined total tomorrow, Thursday, and Friday of 300 points on DIA, which, I mean, they could get that in a day. They could get double that in a day. But a combined 3-day total of 300 points to the upside, that's a nothing burger for the Dow and for DIA. So I think there is a strong possibility that this trade gets us out with our full profit on Thursday or on Friday morning. And if we wobble on Wednesday and Thursday before, not at the latest on Friday morning, we'll roll the trade out. We'll roll both sides out, or we'll roll one side out. But I don't think it's going to be necessary. I think we'll hit that trade's profit easily. And after the announcement tomorrow, keep an eye on your emails, keep an eye on Discord. I plan on sending out 2 or 3 additional triple play trades before the end of this week. So I didn't feel comfortable doing the ones we didn't get filled on. I let them go. Didn't feel comfortable putting on anything else until we have that report. Now, one last thing of note, I've mentioned this on Discord a couple of times. In our collar trade portfolio, we've got a trade on Coreweave that for the first time since we got in is profitable. I'm loving this. We started out as one of the worst starts we had on a collar trade, but I was never really concerned about Coreweave. I was always very confident that Coreweave would come back. I really like this company. I know a lot of people that I like and that I tend to listen to are big on Coreweave. I think this company is going back to the 150, 160 range before the midway point of next year. I've been watching for them to break 90 and use that as a catalyst for me to get into more shares in the collar trade and to probably put on a fairly aggressive bullish trade. Now, they broke 90 today, but the RSI has not crossed over. The 5 and 20-day moving average is right there, and the MACD did give us a crossover a week ago. I want these technical crossovers for confirmation in addition to it being above 90, which means I may not get in. I'm willing to roll this dice. I may not get in until we're between 95 and 100. I'm okay with that because I don't see anything that really stops it from its next strong resistance of about 140. So I'm okay if I don't get in until 95 or 100. And we've got all three technical crossovers, the overall market conditions, and that's why tomorrow is so important. The overall market conditions to allow it to continue to move up, and then also just feeling confident that resistance has been broken through, technical indicators are on our side. And then what I plan on doing, I know we've got several of these trades open already, and I don't want to tie up too much money in the exact same types of trades. We've got a longer term trade on Nvidia, a longer term trade on Amazon, and a longer term trade on AMD and Palantir. Nvidia, Amazon, Palantir, AMD. That ties up a little bit of our cash for open spread trades if you're kind of using the rule that no one single trade ever represents much more than maybe 10 to 12% of your tradable money. When all of a sudden you've got 4, 5, 6 open trades, you want to have some cash on hand. So what I am probably looking at doing, if we get the news I hope we get tomorrow, if Coreweave makes that sort of continued push up to get those technical indicators, I might take AMD or Palantir and take the small win in order to free up the cash. That's all it would be. It's just a prudent thing to do. Not that I don't have confidence in Palantir, not that I don't have confidence in AMD. I am more bullish if we get those crossovers on Coreweave, and I'm probably going to do a very maybe a longer term calendar diagonal call spread, but also possibly, it's been a while since I've done one because I've just been looking for exactly the right conditions, and the markets are so volatile. I love trades that are a little bit easier to adjust, but I might just do a very traditional bull call spread. Go out 2 to 3 months in time, get both an out of the money long call, a farther out of the money short call, get one of those risk to reward ratios that's like, your maximum possible profit is 110, 120% or more. And then trust the indicators that they're going to go the way I think they will go, and book a 50% profit on a trade like that. When you can get 100%, the smart thing to do is take a 50% return, which would be phenomenal. For example, Coreweave just broke over. I'll just give you an example. I'm not going to do this yet, but this would be an example of what I do. March expiration dates, a 95 long call, 100 short call right now today would only cost $2.18. Now I'm going to assume that if those technical crossovers come, Coreweave is probably, I'd probably end up doing the 100, 105 or even the 100, 110. But a 218 debit on a $5 spread means you've got a possibility of a $2.82 per share profit. That would be your max profit. Divide that by your 218 and your net possible return, your max possible return is 130%. So you set up a trade like that and you say, look, I'm not going to, 130% would be great, but a lot can happen in 3 months. That would be 3 months out in time. A lot could happen in 3 months. So the smart thing to do is if I've got 130% profit potential, take 55, 60%. Because you could hit that in a very short period of time if, in fact, Coreweave ran quickly from, say we did that around $98 a share when the stock price was there, and we did a 100, 110, which just for comparison's sake, with a $10 spread, it would probably cost $3.78. So you would take 622 divided by 378, that's 164% return. Max possible return, 164%. I could go into that one and target 75 or 80% return and feel comfortable about that target return. And then if they have a quick run from 100 up to 130, maybe a little test of resistance, but I think 140 is the stronger resistance mark. You wouldn't have to wait until March to get out of that trade. If let's say hypothetically we got into that trade next week, probably 3 weeks in, you're looking at a 75, 80% return. And I love those trades. It's just I haven't had the best of market conditions for a while to feel real confident going into a trade like that. So maybe something like that versus a long-term calendar position, since we already have a long-term collar trade position on it. So that's something I am looking at, and we'll keep you aware of. Maybe we do something more like an in the money bull call, or a shorter term bull call spread on the triple play side of things for Coreweave. But I really like this company. I really do believe by the midway point of next year, I think it'll be back to 170, and maybe even by the halfway point of next year, be back up touching its all-time highs. So we'll see. All right. This was a much longer podcast than usual. I'm behind on getting this posted, so I'm going to go ahead and do that now. Hope you had a great Tuesday. Hope you have a great Wednesday. And there's a good chance I'm going to do tomorrow's podcast a little bit after the Fed announcement, which would be an hour or more before the close of the market. But maybe do it, 1 o'clock-ish my time, because that, Powell will have been speaking for a good 30 minutes by then, and we'll know which directions the markets are going to take things. All right. Hope you had a great day, everyone. Thanks. Bye-bye.